Well, we're back with you on the Market Day Report. I'm Marlon Bowling with you on a Monday, and we're going to take a close look at our ag commodity trade, starting with the grains with a little extra help. We have Dewey Strickler on the line. He's with Ag Watch Market Advisors in Franklin, Kentucky. Let's go to the phones and check in with Dewey to see what's on his mind as we kick things off here. Dewey, it seemed like the big headline item overnight was the fact that we had crude oil and also the U.S. dollar just surging ahead this morning. What do you make of that?
Well, you do have your dollar firmer here, and the crude oil is up. You got your equities are up here as well, too. One thing we know, and that is the grains are higher here, and they're not following the dollar. They're mostly following what's going on in crude oil and the equities. And other than that, as far as any fundamental news in grains, it's just pretty sparse.
I did see one item that came across the wire here a few minutes ago. It said we sold 100,000 tons of corn to Colombia for 2015 and 2016. I guess that won't hurt.
No, it won't hurt. In years past, we wouldn't pay too much attention to 100,000 tons, and especially to Colombia, and I'm surprised they even printed it.
All right, let's take a look at our futures this morning and see how things are starting out. It was kind of quiet overnight, but this morning we have the March corn gaining about 3 cents at 368.5. So, Dewey, we're only one tick off of our high of the day so far. The May contract 3 1/4 higher, and we have December new crop now 2 1/2 higher, trading at 389. So we're basically at the upper end of the trading range if you include that overnight trade as well on the corn.
Yeah, that's correct here. You had last week the funds added a little bit to their short position in the corn market. It looks like right now that they're pretty well done with their selling here, so this giving the market just a little bit of a room for a bounce.
Some of the traders that I've been talking with over the past few days think that once we get out of February or toward March, we'll finally pick up the volatility here in the trade once again. What do you think about that?
Yeah, I think they're exactly right. We really have not had any volatility at all, unless we've had something going on in the outside markets. And I think, once we get February out of the way, we still got another month here until we get to the planting intentions. And I think things are going to be really dull until we get into maybe about a week or 10 days before the planting intentions report.
So what do you view as resistance on the corn, where if we would clear that, it would open the door to maybe take a run to the upside?
Well, right now I would be looking mostly here, like I'm following the July corn. If we got above, let's say, the high we made earlier this month, 383 3/4, you could see a bounce up to maybe around 390. I don't know if we're going to get much more than that, because really we need something fundamentally to push us up into that level, and we really just don't see anything right now. I think when you get into like your July contract of beans, we might see the market could go up to about 905. July wheat, possibly 485.
All right, March soybeans are up 7 right now at 885 1/4. Nice move there. May now 6 3/4 higher. On the wheat trade, we'll go to Chicago first. Here you have the March just fractionally higher. The new crop July up 1.5 pennies at 475 1/2. Kansas City wheat, there we have the May up 1 3/4. July also 1 3/4 higher. So small gains to report there. And in the spring wheat trade in Minneapolis right now, you have the March up 1 1/4. Same for the May, and you have July up 1.5 pennies at 507. In the cotton market, starting out the day, we have the March contract up 44 points. It's showing last trade of 60.45. It did dip its toe below 60 cents momentarily. So that's a look at our crop markets. Dewey, sit tight. I want to talk with you about the livestock trade when we come back right after these messages. We're back with you here on the Market Day Report. I'm Marlon Bowling with you. We're talking with Dewey Strickler of Ag Watch Market Advisors. He is based in Franklin, Kentucky. Now I want to talk about the livestock trade, Dewey. And in the cattle market last week, it seemed like everybody was just kind of biding their time, waiting for the cattle on feed report to come out. And it came out, and then we finally had some cash cattle sales that broke loose. And to some folks' surprise, it was about $4 higher in the northern plains.
Yeah, we did see a little bit of boost in the cash. Obviously, we had a few packers out there needed some cattle here going into this week, so that's where that came from.
All right, so what do you think of this market activity? If you look at a technical chart now on the corn, on the cattle, do you think that we are just chopping around maybe looking for a sense of direction now at this point, or what do you expect out of this in the next couple of weeks?
Well, if you look at a chart, you can go back and you can see back in December, what has this market done? It's just been in a big, broad trading range of about $16, or let's just say really somewhere closer around $12. We don't have anything to push the cattle market out of the range right now, so I don't see any reason for the cattle to do anything other than that's chopping back and forth.
Now, last week we had a retail update, and the market price at the retail meat counter was lower on the beef, but it was higher on the pork and chicken, just the reverse of what we happened to see the week before. So does that indicate anything to you as far as what the packers may be willing to do?
I don't think really it makes that much difference right now. I think it just more or less is what they had a greater need for at that particular time. Doesn't mean there's any big shift in demand. It's just that they may need one